Hi everyone from Kuala Lumpur, Malaysia. We're now here to talk about Stock Smart's basics again. This series is designed to help you have a grasp of investing in the stock market, especially if you're a beginner and trying to get the ropes on how to actually begin. What I want to tackle today is something that has been very close to my heart, because a lot of you guys have been asking if it's something that really works or it's something that should be scrapped from your investing strategy. What I'm talking about is buy and hold investing. A lot of people are asking, does it really work, or is it too late to actually do buy and hold investing, or at all, is it something that you should even consider if you want to invest in the market? Of course, you know me, I'm a technical analyst. I love trading the markets. I love buying and selling. I love the volatility. I love following trends. I love spotting opportunities where you can also make a quick trade. But at the end of the day also, I have a portfolio that I use for investing. That's why it's very, very important for you to segregate your portfolio. It's very, very important for you to segregate your allocation, because if you segregate your allocation, it allows you to have a style for investing and another style for trading as well. So if you're an investor and you want to segregate your funds for investing purposes, here's the thing for me. Buy and hold works. Buy and hold is something that's very useful, and you will see the likes of Warren Buffett do buy and hold. However, you don't take buy and hold investing also out of context. Why? Because there are certain conditions where buy and hold will work. There are certain conditions also where buy and hold will not work. So you have to understand this. If you're doing buy and hold, it has to be for the long term. Buy and hold investing is for the long term. When I say long term, it has to be a very, very long period of time. Not just a long period of time, but a period of time also that covers different cycles. Meaning, it should be more than 7 years. It should be more than 10 years. Why? Because there are certain cycles in the economy where a certain company may dip in sales, but if the company is good, it should recover, and it should have the ability also to bounce back in the future. So, long term, more than 10 years, that should be one of the prerequisites if you're doing buy and hold investing. Second prerequisite at least is the company must be fundamentally sound. At the end of the day, a company that's good, growing, and undervalued is something that you're looking for. You don't want to buy a company that's not going anywhere. At the end of the day, you have to understand this. No matter how long you hold the stock, no matter how long you stay in the stock market, no matter if it's 10, 20, 30 years that you stay in the market, if the company is not good, it's not gonna do you any merit. That's why you have the Kodaks, you have the Uniwides, companies that are not doing well, companies that have folded up. Why? Because they're not growing anymore. They're not doing so well. Think about it. Even PLDT, as of this video, PLDT's income has started to decline, and they've been declining for years upon years upon years. So why am I saying this? Why would you want to put money on something that's not growing? So a very, very important ingredient that people try to miss out on, that if you want to be a buy and hold investor, it's not just about you investing for the long term. I repeat, if you want to be a buy and hold investor, it's not just about you investing for the long term, but it's you also investing in a company that you know will be there over the short, mid, and long term, because the company is growing, the company is good, they're in an industry where hindi sila mauubusan ng customers. So that's very, very important for you to look at. Third is this, and people try to miss out on this. If you want to be a buy and hold investor, it's very, very important also that you have a larger chunk of money already, and you will put it in one go. Meaning, you have this amount of money reserved for a specific purpose, that when you see the markets show you that there's a buy opportunity, especially if you know the valuations, when the valuations tell you that it's relatively cheap already, you put it in one go. Don't shop it. For example, you have ₱1 million, don't shop it na pa konti-konti, lalagay kayo, so it defeats the purpose of you being very, very, very strategic. You have to remember, when you're doing buy and hold, you must be very strategic already on how you go about your money, meaning very precise. It's something that you've studied, because you're buying something that's undervalued, you're buying something that's cheap, you're buying something that you know has the ability to grow for the long term. So look at it from an area na mura yung stock. Look for it from an area also that when you find it start to get cheap, that's when you start to come in. So with that said also, buy and hold will not work if the market is bullish, like what you're seeing in the PSEI now. The PSEI is relatively bullish. So why am I saying this? If you want to be a long-term investor, you want to be an investor that does buy and hold, maybe at this point in time, buy and hold may not work for you. Why? Because the market is high. You have to understand this. If you buy a company, it's not just about buying a good company, but buying a good company at a good price. If you're buying the stock that you want, buy and hold style pa kayo, and the market is relatively high, the gains that you will get may not be as attractive. It may not help you over the long term. So you have to understand this. I'll say this over and over and over and over and over and over again. Buy and hold investing will work when the market, you're coming in when the market is bearish and you start to put in a large amount. If you're doing buy and hold when the market is bullish, the gains will not be so attractive. So don't ever attempt to do buy and hold when the market is hitting high upon high upon high upon high. It's a technique for trading, especially if the market is bullish and the market is going up into an uptrend. But if the market is bearish, no way. Come in, but you have to be strategic. What you can do is keep on adding cash. Just keep on adding cash. Build that stockpile of cash until the stock drops, it becomes bearish, and that's when you come in and that's when you swoop. You have to understand, in every style of investing, there's still a discipline there. What's the discipline for buy and hold? That if there's no buy signal, you sit in your cash and wait for the proper opportunity to come in. And you have to understand this also. The discipline there is this. If the market drops severely, in spite of all the news, in spite of all the negativity, if your fundamentals dictates that it's now time to swoop in and you're a buy and hold investor, come in and put in money. You have to remember this. There's no perfect strategy when it comes to investing, but buy and hold sure works. It surely works, but you have to find the conditions that will fit you. And as I've said it over and over, buy and hold will work. If the market's bearish and you come in, you put money in one go, you buy a company that's fundamentally sound, and you also buy a company that's good, growing, and undervalued, and you must be in it for the long term. Not just for 1 year, not just for 2 years, but something more than that. Alright, so that's it for buy and hold. We're gonna talk more topics about stock investing and stock trading. I do hope that these videos help you gain the conviction in the markets over the long term. And this is Marvin Germo. My heart is to see you profitable in the stock market, and it's time to see more and more and more and more Filipinos be financially free. So this is Marvin Germo, live from Kuala Lumpur, Malaysia. I hope this helps you trade well, trade strong, trade smart. See you all soon.